$500, like I was saying, like Boeing, Amazon, things like that. That's something that I'm nine times out of ten buying a contract in because it's worth so much, and I can't obviously, I can't just go out here and buy 1,000 contracts of Amazon when it's worth $2,000, $3,000, right? It's better just to go ahead and buy a contract in those. So those are the stocks that I look into buying options in, contracts in, I should say. But like I say, you can always look at your cheaper stocks, your $10, $20 stocks to buy contracts in because they're just as good. And I feel those, do jump as long as you do your research on them. Because I had a stock earlier throughout the year that it was called K12. It was more like an online learning school. And that one, I did my research on it, I did my timing on it. And I knew, okay, this virus is coming out. So back in February, I bought a contract, right? Bought it 3 months out. And I said, I knew that, this virus is going to eventually affect this and people are going to start looking into online schooling. And what happened? People started looking into online schooling. The stock K12 was one of the bigger online schools out here. So everybody started looking into investing in that. And then the price jumped significantly. I think it jumped around $40 to $50 all the way, it was at $10 or $15 before, and it jumped to $50 just based off the hype. Everybody thinking, okay, now we have to do online schooling. People are not gonna be able to go in schools because of this virus that's out here. And then come to find out, we end up going to schools and the stock dropped, right? But as long as you timed it right and you got out of it at the right time, you made your money off the hype surrounding the stock. And that's the good thing about it. Any stock that you buy, I would say when the hype is up, you want to get out of it. You want to sell it. You want to buy, like I've done research on Warren Buffett, and he said it the best. You want to buy when people are fearful. You want to buy the stock that people think is not jumping. They feel it's going to go down, down, down. The reason why you want to buy it at that time is because it's at its lowest. Nobody thinks the stock is going to go up. And really, you have to be a believer. When you're investing in stocks or options or whatever, you have to be a believer in that stock, or don't invest in it at all to begin with. So, another market that's very failing right now is oil, right? A lot of people are not traveling. A lot of people are not flying around just due to the virus. So the oil market is down. A lot of investors that I would say are forward thinking could be looking and saying, okay, everybody's fearful of oil because they feel electric cars are becoming a thing now. Electric cars are booming. People want to go and look at buying electric cars now. Tesla is, just out here, another big name that's, bigger than your Fords and everything else now. So people are looking into that, and people are looking at gas and like, okay, nobody's going to be driving gas cars in the future. So gas is going to drop, right? But there could be a catalyst in that because right now gas is low, but what happens when we find something to slow down the virus? When the widespread vaccination goes out and now people are traveling again, people are flying again, what happens to oil prices, right? They can go up. Now, I'm not saying oil prices are going to go up in a year or two from now, but they very well could. And that's an example of buying on people's fear. So you definitely want to, when you're buying any stock, look at the research on it and try to get into it at its lowest point. You don't want to get into a stock and just yesterday it jumped $10. It just jumped $10 and now you're looking at it like, wow, it jumped $10. I want to get into it. No, I would say that's the time that you definitely don't want to buy that stock. You don't want to buy that contract in that stock because 9 times out of 10, if it just jumped, the stock is going to go down. Doesn't matter what stock that you're looking at buying. Every stock goes up and down throughout the year. And 9 times out of 10, when it's just risen a significant amount, whether it's 5% or 50%, it's going to have some pullback. It's bound to happen. And that's when the pullback comes, that's when you want to get in. So let's say stock X jumped from $4 and now it's at $14. And then it pulls back 2 weeks later and now we're around $6, $7. That's when you want to look into getting into that stock. Another stock that I pretty much told a lot of my followers about 2 weeks ago was it goes by the handle BNGO. And that stock, I bought it when it was around $2 and it had a pullback. So it jumped. It went from, I think it was 70 cents to around $3 and it had a little pullback around 2. And that's when I got into it. And then it jumped up to $9. That's a perfect example of getting in a stock that okay, it's rising, it's going to continue to rise, but I don't want to jump in at $4 or $3. I want to jump when it pulls back because it's going to have some of that pull. And just like now, it jumped up to $9, but then it's going to have its pullback. So now it's going to go back down to $8, $7, $6. And once it reaches that pullback, you want to get in, and you want to get in at the entry point that you feel is best. Now you might get in, obviously you can't, nobody's perfect. So when it's dropping down from $9 and it gets down to $6, you might jump in and it might even drop down back down to $5, right? And now you lost $1 per share. That's fine. You're not perfect. Nobody's perfect. Just know, okay, the bottom level before was $4, right? You jumped from 70 cents, you got to 4, you jump down to 2, and you're back up to 9. You do your average, now you're around 4 or 5. So that's your average of your stock right there. And that's what you want to look into buying. Buy at the average price that you think that stock is going to be. Never buy when the stock, like I said, is at its highest, because 9 times out of 10, that's when you're going to look at losing money. And I call that panic money, because that's what's going to happen. You're going to panic, and you're going to lose a lot of money doing that, because you're going to see that stock drop down, and then you're going to see yourself losing money. And a lot of people, when I was talking about earlier, when it comes to option trading, a lot of people can't handle seeing their money go away, right? So you spend $1,000 on something and now you're down 500, you lost 500, you want to pull out. You want to get your money because you're afraid that you're going to lose the remaining 500. But timing is everything. And like I said before, you want to definitely do your research and look at when to pull out and when to pull and stay into it. And when you're in that stock and you're down 500, look into what you think that stock is going to do in a month or by your expiration date. And if you think that stock is going to reach that price, you might as well just stay in it. Yeah, you're down 500 right now, but that's okay, because a month from now, your stock is going to go back up, and now you're up 1,000 and you're at 1,500. So look at it that way. Whether you're buying stock outright or you're doing option trading, you're going to lose something. Your money's going to go down. The only difference is when you sell and you hit that sell button on your stock or on your shares or on your portfolio, whatever you have in there, it's gone. That's what you actually lost. You don't lose money until you hit the sell button. So definitely stay into a stock until you feel, you made enough or you lost enough. And then that's when you get out. Set your stop losses. I talked about it in my first video. Definitely set your stop losses, because you don't want to go below what you feel you want to lose. If you don't want to lose the entire 1,000, you only want to lose 500, then set your stop loss at 500. That way, when 500 comes, you're out of it. But also, don't be mad when the stock goes back up and you realize, dang, if I stayed in it and I just stayed faith in it, now it's at 1,000 and I could have made my money back or made money on top of, the money I lost. So definitely do your research when you're looking at stocks, or option trading, things like that. And do a good dive into what you feel that stock is going to do. Because that's the main thing that you have to focus on when you're doing option trading. What is that stock going to do? Is it going to go up or is it going to go down? And from there, that's when you make your decision whether you want to buy a put or you want to buy a call. And then from there, you sit back, you continue to do your research, of course. And if it takes a dip, let's say you bought a call and takes a dip and now you're down $100 or $500, looking to buy more. Because now when you buy more at that cheaper price, now you're averaging out, right? Your average is going lower. So your average price was $4 when you bought Stock X. Stock X now dropped $2. You bought 500 contracts, right? You buy another 500 contracts of Stock X. Now your average is lower because, now Stock X is worth $2. You bought it at 4, you bought another 500 at 2. Now your average is $3. And now once that stock goes back up to $4, now you're making money. Now you're in the green. So never panic. I would say whenever your stock drops, look into buying more versus selling it. Unless you feel, hey, this is it, I feel it's going to continue to go down, I made a mistake, then that's when you just pull the plug and you get out of it. But yeah, that's one of the main things I wanted to focus on episode 2 was just trading options and things like that. Because like I said, I had a family member ask me and inquire about the quick bang for your buck that I was referring to in episode 1. And that is it. Definitely a quick bang for your buck. And if you realize, like I said, definitely option trading is when you're looking at buying a lot of shares of something that you can't afford outright. That's what the whole thing is option trading. You're buying into something that you feel you can afford outright. Because if you feel you can afford it outright, it's smarter, I would say, to go ahead and buy that stock outright versus buying a contract in it. Because when you buy outright, you don't have an expiration date. There's no, it expires in March and I have to reach the set price. If it doesn't, I've lost all the money I invested in it. You own that stock, and whether it goes down in March or not, you can still wait for it to go back up 2 years or a year from now or 6 months or whatever the case may be. So that's one of the things, that's one of the cons I would say about option trading, or a major con, I should say, is the timing and the time decay on it, but in the expiration date, because they do expire. The time decay is very real, and it does affect your contract price. So when you're in those contracts, look at it, do your research, do your timing right, get out of it when you're up and you feel you made enough, and don't sit on something until the last week or when it's about to expire, especially when you're in the positive, because now you're just looking at profit taking happening to you at that point. So definitely do your research. Another stock, like I talked about before, BNGO, and that's B as in boy, N as in Nancy, G as in girl, O as in Oscar. That stock, I feel, by the end of this year should be worth more than $10. They have some good stuff in it. Look at it. Do your research on that stock. That's one of the stocks I wanted to give out today on my channel. Of course, I'll be doing a lot more. But that's one of the stocks I've been doing research on. Like I said, 2 weeks ago, I got into it. And I feel it's going to continue to rise. It definitely is going to have its dips. Right now, I feel like it's having a little dip. It's definitely next week it should have another dip, just because it just had an excellent week before. But they have good stuff in their pipeline. Look at the stock, do your research on their stock. And if you feel the same way I do, I would say definitely look at buying options into that stock, look into buying it outright. It's pretty cheap right now. I think it's like around $9. So look into doing that. If you can't afford 1,000 shares outright, or you can't afford 100 shares outright, that's fine. Go buy one contract of that. Set your contract out. I would say for that stock itself, if you're going to buy a contract, and let's say you're buying that contract for BNGO for a strike price for $15, and right now it's like $8 or $9, right? For that stock right there, I would say buy it for at least 6 months out to reach that. Just because I feel it might, within the 6 months, it might jump even higher, than your $15 strike price, just because of the good news that they got going on with them. But it might not, and that stock isn't something that usually jumps $2-3 at a week. It usually jumps a couple of change, or maybe, like I said, 50 or 60 cent. But it's not used to jumping $2 to $3 every single week. So give yourself time for that stock. If you're going to buy it $5 to $6 out of the price that it's at right now, give it time. Give it at least 6 months to buy it out, to reach that strike price. That way you're not dealing with time decay. You're not having to check on it or worry about it. If the stock was to somehow drop next week significantly, you don't have to really worry about that. Your contract is going to be affected, but not affected that much by that. Just because, like, as you know, you still have time to make it, so the time decay doesn't affect you, right? So look into that stock. That's a stock that I feel definitely has a great future. Might even get up to $20 by end of the year. But we'll see from there. I feel that stock is definitely going somewhere. They have some unique things there. They have a one-of-a-kind product that they have to offer, to do good medicine research with. So definitely look into it. I appreciate everybody joining episode 2. Thank you all for subscribing. Continue to share. Continue to tell your friends about it. You can repost it, post it. Please do. Continue to share. Because like I said, I just want people to, leave comments, something that you want to learn about, something you want me to go in more detail, what I can do better on here, if I can be more clear, or whatever else. Or if you have some stocks you want to talk about that you want me to get into and dive into, comment, share, and I'll get into that on the episodes going forward. I appreciate you all joining. Thank you all for joining episode 2. Next week, Sunday, 9 p.m., it will be here, and definitely look to tune in. Tell your friends. Thank you all. You have a great day.